Hi ladies, I'll be explaining to you how to prepare a schedule of cost of goods manufactured and cost of goods sold. So let's begin with the schedule of cost of goods manufactured. This is the question. The question reads, Permitan Corporation has provided the following data concerning last month's manufacturing operations. So let's see what is the information which has been provided to you. Purchase of raw materials, indirect material used in manufacturing overheads, direct material, the manufacturing overhead applied, under applied overhead. You have studied previously about over applied and under applied. And then they have given you information on the inventory, which is beginning inventory and ending inventory for raw materials, work in process, and finished goods. So to begin with, we'll look at the cost of goods manufactured for the month. The most important thing that you need to know before you start preparing a schedule of cost of goods manufactured is that the schedule of cost of goods manufactured records three important information. It begins with direct material, then you have the direct labor, and then you have the manufacturing overhead applied to work in process inventory. So these are the three important information that you have to record in a schedule of cost of goods manufactured. So let's look at what do you record under direct materials. If you look into the question, uh, you will not find that direct materials have been given to you in the question. So you have to calculate the direct materials. In order to calculate the direct materials, always begin with the beginning inventory of raw materials. So raw materials, beginning inventory. So you will record the raw materials beginning inventory, that is 12,000. To the beginning inventory of raw materials, you have to add the purchase of raw materials from the question, 30,000. So you add purchase of raw materials, 30,000. Now the total raw materials which is available to the company is the beginning inventory of raw materials plus the purchase of raw materials. But this is not the direct materials that is used for production. To get the direct materials used for production, from this total raw materials available, you have to deduct the raw materials which have not been used for manufacturing, which is called the ending inventory of raw materials. So from the question, the ending inventory of raw materials is $18,000. You will deduct the ending raw inventory of raw materials 18,000 from 42,000 and you get 24,000. This is the raw material that has been used for production. Now if you look into the question also gives the indirect materials which has already been used in manufacturing overheads. So out of these materials which has been purchased and which is available, there were some indirect materials also, but that has already been included in the manufacturing overheads. Because it has been included in manufacturing overheads, it is important for you to deduct the indirect materials of 5,000 from the raw materials that you have used in production, the figure of 24,000. So less indirect materials included in manufacturing overhead. If you don't deduct this, then you will be counting it twice because it is already there in the manufacturing overhead. So therefore deduct the indirect materials of 5,000 and now your actual raw material is $19,000. After this, the next item that you will record is direct labor after direct material. Direct labor is given in the question 58,000. You add 58,000 here. And the last item that you will add is the manufacturing overhead. applied to work in process inventory, that is 87,000. Once you record the manufacturing overhead, you will add all the three items: direct material, direct labor, and the manufacturing overhead applied. And that will give you the total manufacturing cost of 164,000. But this is not your cost of goods manufactured. You're preparing a cost schedule of cost of goods manufactured. Now this is your total manufacturing cost. From here you have to calculate the manufacturing cost of those goods only which you have completed manufacturing. So if you see in the question, there is some work which is in process. It is not completed. You have not completed manufacturing it. So whatever work is in process, you have to adjust that from the total manufacturing cost. Now, if you look here, the beginning work in process is 56,000. Now, the beginning work in process is that uh, work in process which was last year incomplete and which you completed the production in this year. So because you completed the production in this year, you will add that the cost of the beginning working process inventory with the total manufacturing cost, and which is 56,000. So 164,000 manufacturing cost. To that add the beginning work in process inventory, because you have completed the manufacture of this work in process in the current year. So you will get an amount of 220,000, and from here you will deduct the work in process inventory which is ending in this month, which means that you have some ending work in process, you have some unit still which is incomplete and you have not completed the production. So if there is any such inventory which is still in process and you have not finished the production, you will minus it or subtract it from the 220,000 in order to get only the cost of those goods which you have manufactured. So 220,000 minus 65,000 is $155,000 cost of goods manufactured. Next, we take a look into the second part of the question, which says prepare a schedule of cost of goods sold for the month. Once you have got the cost of goods manufactured, now you need to calculate the cost of those goods for the company which they have sold. To calculate the cost of goods which you have sold, you must first begin with those finished goods which were left over from the last month. So always begin with the finished goods beginning inventory, because because when a company sells goods in the current month, the company will first sell goods which was remaining from the last year, which this year or last month, which for this month is the beginning inventory. So last month's ending inventory becomes the current month's, last month's closing inventory becomes the current month's beginning inventory. So start with the finished goods beginning inventory, 35,000. Add to that the cost of those goods which you have manufactured during the year, because whatever you have manufactured, you have to sell that this year. So add the cost of goods manufactured to the finished goods beginning inventory, 35,000 plus 155,000. Now the total goods which is available for sale is 190,000. But from this, you will have to deduct those finished goods which are remaining in the ending inventory in the current month, because you have not sold those goods and you cannot include it in the cost of goods sold during the month. Therefore, deduct the finished goods ending inventory from the question, 42,000. 190,000 minus 42,000, 148,000 is your cost of goods sold, which is unadjusted still. The reason is because if you look into the question, there is an under applied overhead. Now, just to remind you and and just refresh your memory on the under applied and over applied overhead. You saw in the when you were learning the predetermined overhead calculation and the application of manufacturing overhead that you either get under applied overhead or you get an over applied overhead. Under applied overhead is where the manufacturing overhead applied is less than the actual manufacturing overhead. And over applied overhead is where the manufacturing overhead applied is greater than the actual manufacturing overhead. So in this question, in this case, there is an under applied overhead. When there is an under applied overhead, then it means that the cost which is showing is less than what the cost should actually be. Therefore, if there is any under applied overhead, you add it to your cost to bring it to the actual cost. Therefore, you will add the under applied overhead to the unadjusted cost of goods sold. So 148,000 plus 4,000. And this is your actual cost of goods sold, which is the adjusted cost of goods sold, 152,000. This is the explanation of both cost of goods manufactured and cost of goods sold schedules. I hope it has been helpful. If you have any questions or any doubts, please take them down and you can ask me in the next class. Thank you.